darker view is that the excess manipulation of money blows up the entire system. And that's a lot of people hold that view, that you end up with a hyperinflation or something of that sort, a total economic collapse. But I struggle to get to that answer because in every circumstance, when asset prices collapse or something goes wrong, they just print money. And when you're the world's reserve currency, it's bloody difficult to hyperinflate it. What you end up with is this ridiculous rise in asset prices, which then gets rid of this ability to have this massive downside.
Hey, Savvy Finance enthusiasts. Massive shout out for being the heartbeat of Savvy Finance. Your support has been the wind beneath our wings, and we can't express our gratitude enough. Now buckle up because we've got an exclusive deal just for you. Ever wanted a slice of the action? We're offering a golden opportunity to own part of our YouTube channel's potential future revenue. This isn't just an investment, it's an invitation to be a part of our story. Investing means you're not just an investor, you will be a participant in the future of Savvy Finance. No cheesy lines, just a genuine call to embark on this journey together. But wait, there's more. Your mission, should you choose to accept it, become a Savvy ambassador. Share our videos on every platform: Facebook, Twitter, LinkedIn. Your shares amplify our visibility, potentially translating to more views and more YouTube revenue. Here's the kicker. If our viewership increases, we would not be just growing financially. We would be making a tangible impact by spreading valuable financial education. Now the icing on the cake. Invest and you'll score exclusive access to our private Savvy Finance Discord. Here you can chat with Savvy Finance, swap ideas with fellow investors, and be at the forefront of exciting developments. Click on the link below to register your Gigastar account. You can also find the link to my offering page in the description below. Get your Gigastar account ready, review the offering details, and let's embark on this thrilling venture together. To the incredible Savvy community, thank you for being the backbone of our success. Your journey is my journey, and together, we're creating waves. Cheers. The constant debasement of fiat currencies has been a rallying cry for most sound money enthusiasts. Prominent investors and speculators from across the board have shared widely held sentiments that we are heading for the complete collapse of the global monetary system due to central banks' insistence on printing their way out of every difficult economic situation. According to many of these sound money advocates, we are quickly approaching a time when even strong fiat currencies like the dollar will be worth much less than the paper on which they are printed. However, amidst all the glue and doom calls rises a dissenting voice, a prominent investor who believes there is still a way out for the global economy and financial system. Real Vision founder and chief executive officer Raoul Pal believes the United States economy, and by extension the global monetary system, still has a high chance of surviving and thriving for many more decades. According to the former Goldman Sachs executive, the United States has the advantage of the US dollar, the world's reserve currency, and with it the privilege to print as much as it wants during times of turmoil. Pal believes the money printing will continue for at least the next 7 years until a more permanent solution is fully developed. This solution will address the multi-pronged challenge of demographics and productivity depletion, issues that Pal has identified as the real culprits that started the unending chain of money printing. We will now bring you clips from Raoul Pal's latest interview as the renowned macro guru gives a unique and fresh perspective on the long-term macro picture. Please watch, share, and like this video. Also, ensure you subscribe to the channel, turn on post notifications, and drop your comments and observations on Pal's video in the comments section below. Thanks, and enjoy the video.
The debt problem is really interesting. 2008, every major government in the world of a developed economy hit 100% of GDP in debt. So, okay, and interest rates, let's say 5-year interest rates where they generally finance themselves, have averaged around 2% or less. But so is economic growth. So if you think of GDP as all of the money circulating around to pay for the debt, there's no more money left over. But the problem is the private sector is over 100% of GDP in debt in every major country. So who pays for that debt? So that's when they started shoving the interest payment debt onto the balance sheets, because the world basically hit the tipping point in 2008, and people still haven't worked this out. But I think I was the first person, and still maybe the only person, who's gone back and calculated all of the interest payments and realized that they are, and the balance sheet growth, and realized that they are just 3.5 years apart. It's the same chart. They just keep monetizing it. And that's the way that they see out of the debt, is to mutualize those payments across everybody by increasing the balance sheet. But the debt doesn't go away because GDP is not growing fast enough. So you have to change the GDP formula. If not, you're in this endless trap where you're printing more and more money, making the rich richer, the poor poorer, ad infinitum. And I think that for individuals, as I said, there's only two assets that outperform this. That's technology and that's crypto. Okay, fine. The economy, that's really hard to get this to sort itself out. People are waiting for a collapse, the market's down 80%. It can't. The reason it can't is the central bank debased the currency and it makes the stock market go up optically because they can't allow the collateral of the system to go bust. So they don't allow the system to go bust and it creates this ongoing problem. But if you listen to the narratives from the central banks and the governments, what they're really saying is the whole green energy revolution. Europe is massively funding this. And yes, it's good for the planet. Yes, it's good for a number of things. But really what they're trying to do is lower the cost of electricity. Because if you lower the cost of electricity, it has this multiplier effect on productivity. And that's how you can grow GDP growth. The other thing is population. Well, we're shrinking populations, as I said, so we have to replace people. So look at Amazon warehouses. The growth is not in people. The growth is in the robots. The robots work 24/7, 365. They never complain, and they cost a fraction of a human. So every company is incentivized to employ robots to do jobs instead of humans. Then this year, we had the nuclear bomb of deflation, which is human knowledge, lawyers, doctors, accountants, creative artists, developers, everybody, and they're replaceable via the infinite knowledge machine that is AI. That's scary for us as individuals, but if population growth is a large part of the components of GDP growth, you can create infinite people by the robots and AI.
There are many important examples that support Raoul Pal's theory that increased productivity and economic expansion will help take on the debt burden so we can continue to kick the can down the road with periodic money printing. One common example that macro analysts like Pal and Lynn Alden have shared is how globalization efforts helped in the early 1980s when the country's massive debt first became a widely debated issue. The national debt of the United States hit $1 trillion for the first time on October 22, 1981. It became a very hot political issue because, unlike it is today, Americans still appreciated how huge that figure is. Then came the globalization efforts, primarily reflected by technological advances that made it easier and quicker to complete international transactions. According to the International Monetary Fund, the 1980s and the 90s were the decades of globalization. In fact, the term globalization began to be used more commonly in the 1980s. It was also around this that China adopted its open door policy, a new policy that opened the door to foreign businesses that wanted to set up in China. All of these developments helped the US kick the can down the road for another 40 years. If the artificial intelligence revolution is as grand as Powell predicts it will be, we could get another 40 or 50 years of further developments and possibly avoid the gloom and doom many people have been predicting. Let's get back to the interview.
So there are schools of thought, even coming out of Oxford University, that says we could hit a tipping point where the GDP of the planet doubles in a year or even a week. Now that sounds extreme, but if you put infinite people or infinite productive units into the economy, you can make infinite goods. Now who pays for the goods? Maybe the machines pay for the goods. We don't know. This is a whole new economic system being built in front of our eyes. This is something I call the exponential age, which is where all of these technologies are coming together, from energy to AI, to robotics, to EV, to space, to 5G, 6G, all of these things, biotech, all coming together, genetic sciences, to create this fastest period of technological change in all of humanity. And it's the only way out, and it's scary. When I discovered this whole understanding, both the exponential age and the everything code that came later, it was like a veil had been lifted from my eyes. Macro guys generally tended to be mean reversion guys. They look for something to get excessive, then they want to, bet against it. And they see the world like this, like the business cycle. And none of us could understand technology and why it kept going up. We kind of could understand crypto because it's like this macro phenomena of, a whole different financial system, parallel financial system, getting adoption, etc. But technology, none of us got, apart from the few. And when I started dividing everything by the central bank balance sheets to take account debasement, I saw that technology was one of the things that just kept rising. And that led me to dig into this whole process. And that completely changed my framework of the world. I wasn't looking for the blow up now. I was looking for the melt up. And, crypto markets had taught me to use these logarithmic charts of these trends. If you look at the chart of Amazon, Apple, Google, Facebook, all of these, on a logarithmic chart, they're almost perfectly smooth trends. They're network adoption models. But when you look at them normally, they look like they go up and down a lot. Yes, they do, but within a consistent, secular, powerful trend. Once I saw that, I'm like, if our job is to make money, then this is the trend you need to be on, the secular trend, because it's driven by the central banks. It's driven by technology itself, but then also driven by the central banks debasing. So you get the double whammy from it. It's like, okay, this is perfect. And it also is the answer to the massive macro problem of excess debt and slowed GDP and aging populations. So when you've got something that's so against the persistent narrative that everything's screwed and it's all going to go wrong, and you see it and do a lot of hundreds of hours of research on it, and you come up with a completely opposite view, it's like, oh my God. And then I started surfacing that view for Global Macro Investor and then within Real Vision and elsewhere. And it was like a light bulb moment for people. They're like, oh my God, I suddenly now understand why things are happening as they are, why technology stocks keep outperforming, why crypto keeps going up, why people are angry, why politics have become so polarized. It all starts to make sense. And if we can make money from it, great.
According to Pal, all hope is not lost, and there is still a very high chance that we can continue to coast along without any serious repercussions for Americans and other countries with strong currencies. However, investing is still very important and compulsory for everyone who wishes to not just maintain their wealth, but also increase it over time. However, asset classes like bonds will not rise quickly enough to make up for inflation. Popular stock indexes like the S&P will do just fine, helping you to maintain wealth without increasing it, but cryptocurrencies remain the top choice. According to Pal, only crypto and technology stocks will continue to outperform the rate of currency debasement. What are your thoughts on the video? Please drop your thoughts, comments, and observations in the comments section below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks for watching.